But Chipotle.
I don't ever trade news regardless. So like for me, you're totally preaching to the choir because this is, like I would never sell Chipotle based on news. Let's put it that way.
You mean McDonald's?
McDonald's or whatever.
Anything.
Yeah, anything. Like if anything, I wanted to buy I don't even like trading McDonald's, but I wanted to buy it the other day after hours. I just find McDonald's to be very hard to trade because
How about this one, Victor? 2 years after McDonald's sold Chipotle, they came with their E. coli outbreak. Now McDonald's is doing it all by themselves this time. See, they don't need any help from anybody.
Can you still sell puts in McDonald's in your opinion, or you think the trade's over?
I thought
You probably could.
I thought the trade was over yesterday. I thought when the stock rallied back to $2.99 yesterday morning, I thought the trade was over. I like the downside of this trade, not the upside.
McDonald's now, the downside?
I like the downside.
Oh
Here.
no!
Oh my God.
Oh,
You
no.
never learn.
No.
Oh, I'm sorry.
way.
I like the downside because
Victor.
You want to sell
because-
McDonald's going into a recession? Are you crazy?
I'll tell you why.
We're already in a recession.
Because the
I
whole
know.
concept of the chicken Big Mac is so freaking stupid. Like it really bothers me. Like just because you think you can put two pieces of chicken on two pieces of crappy chicken and replace it with hamburgers, like that's innovation. That just drives me
What
crazy.
do you want them to do? It's
Watch
Something-
I mean, it's like
I don't
Taco
care.
Bell. What do you want them to do? They make tacos, and so they change the ingredients a little bit.
And let's
They
just
stuck a Cheeto in there. They stuck a
No.
Cheez-It or whatever it
You know
was.
what?
in
fine.
there.
So let's put
You're
like
wrong.
let's put whatever else they have at McDonald's in there, like a sausage patty or a crab cake patty, whatever. I don't care.
Excellent idea.
You don't know the American people, Tom. Do you not remember when
he's out of
Chick-fil-A
touch for
and
crying out
Popeye's
loud.
chicken sandwich? Do you not remember when there was complete pandemonium over chicken sandwiches like 2 years
Yeah,
ago?
I
You
do.
don't know the American
I happen to
people.
be a chicken sandwich
Connoisseur.
aficionado, connoisseur. Yes.
Okay. All right. Let me ask you another question.
Okay.
Along the lines of business as usual. McDonald's business as usual is selling people stuff that's going to make them sick. If it's not E. coli, it's the 19 ingredients in the fries. We'll get there another time. But
Those
Boeing's union voted 64% against their latest labor proposal, which included about 35% raises, a $7,000
Sure.
bonus, and some other perks.
Yeah.
This thing is costing them $1 billion a day. This is now I think we're 5 weeks in. Boeing is still on its butt. Can I ask you, this is another interruption trade. McDonald's is an interruption trade. Boeing is at 150. Can I
Yeah.
ask you, is there any part of you that's licking your chops to sell puts in Boeing here? Or is this a company that's destined for nationalization?
No, it's not destined.
Oh my God.
No, not at all. But you can sell puts in Boeing till your hands bleed, but you cannot. And I
Tony,
repeat,
you like that?
I
You
know.
like when he says
I know.
those
I know.
even-handed
I almost wanted to
comments?
do this trade for option trades today. My podcast every Tuesday and Thursday. Today happens to be Thursday. Lucky you. But now I can't because he just said that.
you can sell puts in Boeing literally till your hands bleed. I just think you can't. The problem in Boeing is you just cannot be shorted. You can't be shorted.
Yeah, you make way too much money being short. It's a lot harder to make money being long it, but that's the way we like to do it.
Can't be short Boeing.
I agree. All right.
I
My
agree
third
too.
business as usual, both narrative and trade. The first was McDonald's business as usual. Second is Boeing business as usual. And my third is the U.S. government business as usual. We're $36 trillion in debt. We are going to be running $2 trillion deficits as far as the eye can see. And in the last 2 weeks, this is what's really going to get him, Tony. In the last 2 weeks, storied investors and traders like Stanley Druckenmiller has come out and said he's short the long end of the curve. And just a few days ago, Paul Tudor Jones came out and said he owns no fixed income and he's also short the long end of the curve. And the reason is the prices do not make sense. They're
Did you ever
completely
think
out of
that those
whack given
guys
our
might
fiscal
be-
situation.
I have two things to say. Did you ever think that those guys might be short, saying they're short the long end of the curve because the long end of the curve went down? Because I don't believe either of those two attention-seeking
Lewis, I'll say it for you.
They're attention-seeking whores. I don't believe either of those two losers. And you can say whatever you want about Stanley Druckenmiller or Paul Tudor Jones, whatever. The only reason they talking smack is because they had an opportunity to say, "Oh, we're short the long end of the curve." They didn't say they were short the long end of the curve before it dropped 8 points. They said they're short the long end of the curve.
You did, Victor. I remember that.
They said
You're
they're
not attention whores, even though we're on air 14 hours a day.
both those guys came out and said we're short the long end of the curve after they drop 8 points. Okay, to me, that's gutless. To me, that's just pure PR garbage. And I don't believe either one of them, nor do I trust either one of those two guys.
Okay, so then let's get into a more fun conversation.
So don't give me this storied crap about, what storied investors are? Storied investors are the guys that go out and say, when the Fed cuts rates, and then they come out and say, we're short the long end of the curve. Like, that's the ballsy play. After they've dropped 8 handles or 6%, to come out and say we're short the long end of the curve is gutless.
You know what's even more ballsy? For weeks prior to the cut, let's say you had a show called The Price of Truth at 5 p.m. Central.
Yes.
And you were telling everybody that watched to be short the long end of the curve into the cut before it happens. That's a little bit more gutsy. But let me ask you this question. When
But
Tom
unfortunately,
Sosnoff
nobody
goes-
watches that show.
So when Tom Sosnoff goes on CNBC, is he speaking with an agenda? When he talks about his position, when he says,
No.
I think Reddit is going to be a terrific investment over the next 5 years, when he says,
pretty
I'm
right about
short
that.
crude oil or whatever the case may be, does Tom Sosnoff have an agenda? And if not, why is it that the people can trust what you say on television, but they can't trust what Paul Tudor Jones says? They can't trust what Bill Ackman says. They can't trust
I'll tell you why.
what
First of all,
what is it? Hold on. What is it about the incentives of Tom Sosnoff
No.
versus the incentives of the others
I will tell you.
that cannot be trusted?
First of all, I didn't say that you can't. When Bill Ackman or Paul Tudor Jones or Stanley Druckenmiller say something, what they're saying is just their opinion. I'm totally fine with that. And if they say it before the fact, the reason what I said about Reddit when I said it was, that was before the IPO. And I said, yeah, I'm long this. That's saying something, I like this play before it went up. Like, it's one thing. I don't care if Ackman comes out and says, like he said when the market was crashing, goes, I like certain stocks here. I appreciate that play, because if you're going to be a contrarian, you're going to go counter to what everybody else is doing. I think that's totally cool. I'm completely fine with it. When Ackman comes out and says, I want to sell, Herbalife or whatever it is, I'm totally fine with that, because that's his trade. That's his opinion. I don't care. But when these guys come out after the bonds had already dropped 8 points, that's what pisses me off. If I went on CNBC or some other network after the bonds had dropped 8 points and said, I don't like the bonds here, I've been short the long end of the curve, I'm like, oh, please, give me a break. I always, if you watch, anytime anybody ever asks me what they think, I always say the exact opposite of what the market's doing, because I am a contrarian and I'm always going to do opposite of whatever any of the markets are doing. So I absolutely take the other side, not the side that's obvious.
If in 6 months, the 10 years trading near 5%, what will that have meant about those calls then? In other words, can it also be just time horizon that
Yeah, sure.
Tom Sosnoff trades for the 45-day cycle?
Sure.
And the people that are coming on to speak to a mainstream audience are probably not trading for the 45-day cycle. They're speaking on a little bit longer time frame. Is there also some validity to Tom Sosnoff saying that the bonds have moved 8 points? In our world, that's a huge deal. But perhaps somebody on a longer term time frame where the 10 years only at 4.25, where the 2 years at 2, and the normal differential between the 2 and the 10 years is supposed to be 100 basis points in a normalized economy, that they're speaking to the next 75 basis points in that spread.
That's bullshit. That's not how life works. I'm sorry. That means
what is that ad hominem attack? Can you give me some basis?
That literally means
opinion
nothing to me. That is the most ridiculous thing you can say. No.
Just flat out reject it with no logic.
Yeah, it's not with no
your
logic.
Network. You can do that.
It's not with no logic. It's just like, when you say to me, here, Tony, ask me how the Bulls are going to be this year.
How are the Bulls going to be this year, Tom?
I don't
Have
know.
a lot of turnovers this year.
I think they're going to be really good in 2027. That's so Victor wanted to hear. How do you like that, Vic? 2027, love the team 2 years from now. Right now, sorry, I didn't know we were talking about. Yeah, I didn't know we were talking about now. That's all. I'm just saying.
All right.
This segment, what's up there, brother Will Hotep? That segment always has me laughing on Tasty Works.
Hi, everybody. This is Dan Sheridan from Sheridan Risk Management. Happy Monday, September 23. And I have two ideas to share with you. One is on a trade that worked well last week and that I put on today. And here is the trade that I put on today and I like is a calendar underneath the market. So we're currently at 57.16 and we're going to look at a calendar trade. A calendar trade is simply a mixed month spread. I'm buying a farther out expiration, OX16, selling it closer on October 11th, and the same strike. A diagonal would be different expirations, different strikes. So I'm placing the 56.90 puts the strike below where we're currently at 57.16. So we're at 56.90. So the question is, why would I place a calendar, in this case, 26 points under the market? There's two reasons. Number one, we're near all-time highs. I'd like a little more room on the downside as I'm constructing a trade. Number two, even when you put a calendar underneath the market, your deltas are going to be pretty neutral. So I'm getting a head start to the downside without committing the deltas. And realistically, when you're on a $5,000 vehicle like SPX, 20 points is nothing. I mean, the 56.90 put calendar is the same amount as the 57.15, right at the money. So you're not getting a discount by going out of the money because on the downside, things go down faster. So I like this. And so, if I look at this trade for managing it, where I would adjust it here, I'll be out near this, the break evens 57.70, 57.80, we'd be past the all-time highs. And on the downside, my adjustments would be down 56.20. But what's interesting, folks, what's interesting on this thing is that if you said, well, explain to me a little more about this trade. Well, it's OC11, so this thing is this trade is a 18-day calendar. My shorts are 18 days out. My longs are 23 days out. So map this out, Dan. What's this trade going to look like? I'm looking to be in it till Friday, about 25% of the duration of the short. So if you look at, so we can put a little legs to this, the expected move or one standard deviation to Friday is about 60 points. So what does that mean? So I can put a roadmap here. I can say 56.30 on the downside. Excuse me, that's not right. The current price is 57.16. 60 points on the downside would get us to about 56.55, right? So 56.55. And then the upside, if we add 60, 57.75. Dan, what does this mean? What you're going over? So for this trade that I put on, this calendar, this 17 or so day calendar under the market, it's saying the SPX, there's a 68% probability on Friday. I actually bought 3 more of those calendars at the same price. All right. There's a 68% probability we're going to be between 56.55 and 57.75. 68%. So are we probably going to get to an adjustment on the downside? No. Right? We could. Could we be getting to an adjustment on the upside, the break even? We could. And if we went up, right, what would I do if we went up to this 57.80 level, I would add a calendar. I'm going to show you a little trick here. If we got up to 57.80, I'd add a calendar in the calls at the 58.10s. But I do something a little bit different. I would do it only 3 wide instead of the same width of the original calendar. Why? It's a ton cheaper, and I can reduce my my short delta exposure when I get up there. So a few ideas. So this is how I kind of look at trades. Once I get a trade, when you look at through the lens of the expected move, and then you can kind of map the whole trade out and keep it very simple, simpler. Anyways, so that's what I'm looking at. And you can see here, I think I just did, I did a few more of those. So I did that calendar 56.90. I bought one at 580. Then I bought 3 more at 570. A lot of times I scale into them. As the market's going higher, I can get a better price. All right. Anyways, so that's what one of the things I'm looking at today, and the market's still going up, which, short term it is. I mean, that's the market's a little happy now, but still, as I'm structuring trades, I still want them near neutral, but a little more room on the downside. All right, that's the calendar. And then real quick, I'm hoping to have by this coming Friday, my class on all wheel strategy. Many of you seen the wheel strategy, but just do it with options. And most of you have, when you're looking at an all wheel, most of you know the usual dance of an all wheel strategy. Right? And the usual dance of an all wheel strategy is you sell a put, and you do that for monthly income, and you're excited, and you just bring in cash every month. If the put goes down, you get assigned on the put, then you're long stock. As the stock goes up, you're going to sell calls against it. And this is all a bullish scenario. Eventually, as it goes higher, you could get assigned on the short calls. That'll negate your long stock. What you'll get, you sell puts, you get assigned on the short puts. Then you get long stock. As it goes up, you sell calls. As the market goes higher and higher, obviously you could roll the calls or do something. And eventually you get assigned on the short calls. And that takes you out of the long stock. And then you do this whole process again. You kind of start over and you sell puts, right? That's the conventional wheel strategy. And what I'm looking at is to this course, and I'll let you know when this should be done. But because you can see when you're selling, I'll just give you a little bit of this. When you're selling a cash secured put, which looks like a covered right, and if I sell a put, maybe a 17 delta put, about 25 days out in Microsoft's at 433, I sell a 415 put for $2.20, but I've got to put up 41 grand, right? To sell the put. That's a lot. So you're making $220 divided by 40 grand. That's not a great deal, right? So if you do something like you sell a 415 put, maybe a 17 delta, 25 days out, if I go buy the 390 put, 25 points lower, now I'm doing a put credit spread for $1.65 credit. Well, instead of instead of making scenario one $220 divided by 40, let's just say $40,000. Scenario two, I'm bringing in less, $1.65 credit for 165, but this is a vertical spread. So my width is 25, right? So I have $2,500 of on this $2,500 on this trade is my risk, less a credit of 165, or what is that, about $2,340? I'm kind of winging it, right? So would you rather make 165 versus 2,340 or 220 on 40 grand? So what I'm going to go through is every step of the wheel, show you how I would do it, and walk through the whole wheel. And I should have a course on that. Hopefully it'll be a help to you. And the main reason this all wheel option strategy, some of the advantages over the conventional wheel strategy is you're putting up much less capital, much higher yield potential you have here, because you don't have to deal with stock. And we'll go through some of the nuances about it. So those are a couple things on my mind for today.
Hey, Brother Will. Yeah, I've seen the Will strategy done many a time, different ways. But it's an income-driven play, purely for just getting income. You just, selling puts, they go down, then you sell the calls. Sell the puts, then sell the calls. And you just keep doing that over and over and over, bringing in income. That's just, I've seen the Will strategy many different times. I have a calendarized version of that literally, it's basically diagonals. Instead of just vertical spreads, I'm doing it with diagonals. So I'm doing the covered put, covered call, and moving the strikes around. And then, as things go in, to a certain amount of profit, if the market starts going the way you want it to, then you'll do the diagonal, on the downside. And then, as if the market continue, so there is a way to do it, the different ways to do the Will strategy. And, because it's like one big wheel going around and around and around. And, it's a pretty viable strategy for income. Just, bringing in weekly and monthly income. A lot of really cool strategies out there. The wheel. That's why I don't do a lot of zero DTE stuff, because that's very speculative, unless I'm doing the lotto ticket trade, and that's more than zero DTE. It's like a few days out. It's like 2 or 3 days out. But it's it is what it is. So we'll look at the inventory. Our deltas are pretty flat across the board, with the exception of silver. That's still long, a lot more deltas. But I expect that, because if you look at the silver chart, silver is, let's get silver up here. It looks like it's fixing to collapse, especially after that major spike. It needs to fill this gap before going back up. So we'll see. We'll see if it does or not. It is what it is. If silver does that, cool. If not, cool. If it does go down quite a bit, what I'll do is I'll buy back the call version, because that'll be next to nothing. I'll keep the put on, and I just may roll the put, depending on how much credit I could get. I may just roll the put. If it goes against me, I'll roll the call down, or I may even take it off and just keep the put on. So, I'm just kind of, because if the call is worthless, then there's no need to go, unless, I could get more, if I could get some credit for the next, for rolling it down, but because this has the potential to spike like crazy into the so-called holiday season, I don't want a short call out there on silver, because you saw what happened earlier this week. It just, spiked like there was no tomorrow. And I'm not saying it will happen, but, I would rather it spike to the downside than the upside. First, volatility will be in my favor, but I don't want short calls out there. like I say, never sell short calls. If you're doing the only time I do it is when I'm doing a strangle, is where I sell short calls. So the inventory, everything's pretty flat delta. I checked the inventory, and it's all pretty much seriously flat deltas. FXI is still kind of, I mean, it's 4 deltas, so it's not like, or 5 deltas, so it's not like the end of the world as we know it. 5 deltas long. So FXI has the same problem as SLV. And a lot of that was because of the geopolitical scenario that Biden and Harris put up. Everybody's scared and doesn't know where to go. But I still believe that this has possibly the ability to range. We're at its highest form of ATR that it's been in for a year. It's never moved this much. And a lot of that is, you could tell, just look at the gaps that are within, look at the size of these candles and look at the gaps. So it's telling you not only is it big ATR, but it's also big volatility. So, or higher volatility. Volatility's come in quite a bit since then. But, it just kind of gives you the foundation, of where things are at. But I'll see. And then next on the agenda is the trades that did not get filled. And this, I always give it 3 times. And if I can't get it filled 3 times, I just take it off and I won't do the trade. And the ones that I'm looking at are XOP, TLT, and GLD. Those are the ones that clearly did not get filled. And these GLD and TLT, I tried a couple times. And where are we at? Yeah, so this one is definitely 22 credit. This one's going into our danger zone. In other words, we missed out on, well, it's only 25 cents a theta now. So, I mean, the deltas are even stronger than they were before. And this one is GDX. This would be great because if, again, it's looking at the bullish side just in case. And again, it could fall. I mean, if we go to gold and see where gold is at, this thing could actually collapse. But let's go GC. Gold is down $10. So that doesn't bode well for, I mean, it's great for trying to possibly put on a butterfly, which is what this was. That was my theory, was like this thing could go down to a certain level. But if you look at our deltas, where our strikes are at, let's see where our deltas are for December. And remember, this is a trade that you don't want to be in, very long. You have to hold on to it in order to make money, make enough money. But you don't want to, so it's definitely moved quite a bit against us. I was looking for 20 cents of credit, and the credit is, so it's only $2 of a problem. It's only $2 problematic. If I did this again, 17 deltas, 28 deltas, 35 deltas, then again, okay, we're just moving it back a little ways. Because this is, our 22 deltas is kind of, it's a little scary in terms of, because that means it's got a 44% chance of getting it down there where that strike is. Let's see what this is. Yeah, that's too much in terms of this butterfly. Well, that's 1/3. So I'm not really pissed off at this butterfly. It's 1/3 the width of that strike in terms of that put spread. This one is almost 1/3 the width of the strike. This one will give me more room. So I kind of don't mind this. You have an 82% chance of getting 50% or an 85%, 71% probably a profit. You are long 11 deltas. With gamma, you're long 12 deltas. Okay. In case this thing moves $1 away from you, you are long 12 deltas. 157 buying power, 1/3. We're getting 1/3 the credit of the buying power. Let's see what we got on the chart. Yeah, this thing can move $1 easily. Again, I look, $2, excuse me. It could easily move $2. And the reason I say that is I always double the ATR. So if I do this, where that short strike, or where the market is right now at 41.71, it could get to 39.71 and in a heartbeat, and that would put us in a little bit of a, it'd be a little problematic in terms of theoretical 39. Yeah, we'd be down around 20 some bucks. If this thing moves, it's only been moving like 40, 50 cents, but it does have the ability to move $2. So it could be kind of problematic. We are getting close to, not a full third of the width of the strikes, but we're getting close to a third. So if I did this, I'm going to put this one on. I'm going to try to put it on for a third the width of the strike. And the only way that would happen is if gold fell. The thing is, if gold gets in our right between in our tent, that's usually a sign to just start looking at taking it off, because chances are it will continue, and or at least take off the right side. Remember, this is the lawyer, and you've got two, like double the client here. You would take one of these off, which would be a put debit spread, because it would be fully in the money. You would be on your profit with just the debit spread alone. So it would be no sense in keeping it on. I mean, it could continue to go down and you get more profit, but you have to be very careful. But we're going to do this one. I'm going to send this one in just in case. We're going to send that to the desk and see if it's going for 44, but I'm going to do something ridiculous and see if I can get filled. That was GDX. This is the last one I'm doing on GDX. If it doesn't fill, then I'm not going to do that trade. But I think Tasty likes its commissions. So if they like commissions, they'll fill the trade. Because market has to fill the trade. It has to fill it up. TLT is getting away from us. So of course it's the credit is like half of what I was asking yesterday, because TLT is starting to rise a little bit, and it's barely any credit. I mean, the credit is about the price of commissions. Let's take a look at the chart and see the possibility of TLT. Yeah, see, it's been collapsing. And today it's just barely, no, it's going up today. It's going up. But overall, this thing, and it has the ability to move $2 again, double the ATR. And so I have to plan for that, for the ability for it to move $2. So I'm looking at this going, I would like to get into it, but I would like to get into it if it falls. And that's what I'd like to do. If this thing could fall just a little bit, like the song by Slave, Just a Touch of Love, just a little bit, I would like to see this fall just a little bit. And then I would get my credit I'm looking for. Now, the natural is really, really expensive. What's the natural? 4 cents credit. So it's 4 by 12. 8 is the middle, but I'm gonna go I'm gonna go 13, because if this market starts to fall, then it'll be more likely that it's gonna fill my price, that I'll get filled on it. That's just the nature. I like to see if the market could chase me and not the other way around. So we're gonna put that one back on. We'll look for some new trades now, because I would love to fill this up with trades. And let's take a look at the market. We looked at with the SPX, but let's take a look at. We already looked at bonds, looking at the TLT. So SPX is up quite a bit. VIX should be down quite a bit. Oops. We'll take a look at price of capital, price of fear, and price of commitment. Yeah, VIX is down a little bit, a lot of bit, 43 cents. Going down, it's down to 18. So that means that more than likely we're entering a lower volatility. Not saying we're going to get there. We're entering that lower volatility stage. And now let's look at the price of money, bonds. Price of commitment, price of fear, and price of money. I'll do the easy way. There we go. Because I want to see the whole thing. So bonds are pretty much nothing right now. So I mean, we're looking at a make sure I got ZB in there. Yep, that's the price of money. $sign ZB. So nothing. Okay, 1 penny down. So bonds are starting. So that means that TLT trade can get filled. I'm not saying it will, but there's a possibility it's going to get filled. Let's see where our trade is at. Yeah, it's going up penny by penny for the credit. So if this thing falls, and our because we're asking 13, and we're still at that 12. So we'll see what happens. We'll see what happens. If bonds starts falling more and more, that gives us the ability to get that trade filled, to get that done. So okay, so cool. Now looking for opportunities, new ones. Even though earnings is out, I don't like trading earnings. I've done good on some, but let's take a look at XOP, because that was the other one. And XOP was that condor that I was asking 123, and it's down to 111 credit. So chances are this is not going to happen, because you've already lost, about 5%. No, not 5%, about 12%. I mean, not 12. You lost, you lost about 12% credit so far. Lost about 12% credit from when we initially tried to put it on. So that's not something I would really recommend. Although, where's the deltas in this? It's still delta neutral. Volatility must have come out of this, and that's what it looks like. That volatility is leaked out of this one. And remember, we're selling volatility on this. Look for opportunities on the buy side. Since VIX is down, SPX is up. We'll look for volatility. Yeah, look at volatility came out of it, minus 2.3 at a XOP. So let's go and see what can you buy in terms of volatility. Is there something to buy? Liquid ETFs. I don't see anything I can buy in there. So let's look at stocks. Look at all of it. High options volume. Tesla. Nope. Tesla's IV rank and volatility are still too high. Let's do this. Okay. Is there anything? ARK still too kind of high. Yeah. I'm not seeing anything in lower volatility that I can buy. Not seeing it. The lowest we have is ARK Investments, but the IV index is 37. So I would never buy that. The diamonds, DIA, the diamonds, it's okay, but I wouldn't do that. Okay, Alcoa is down, but still yet the IV index is pretty high. The IV rank is lower, not low, but lower, but the index is pretty high. So I don't see anything I can buy that's high options volume. Let's see liquid. Let's go to liquid symbols. Let's go and find some liquid symbols. We should get more out of that. And what's my filter? I have a filter in. It's kind of like a scan. Okay, I don't want any earnings in the next 51 days. Cool. And I have an IV rank filter. Oh, I don't know why. This is why we're not seeing it. Okay, there we go. I messed up. Okay, let's go back to liquid ETFs. I had the filter on, the wrong filter. So okay, now we're seeing okay. IV rank. Well, it's still there's not really much in IV rank that we can. I'm not seeing much. It's still the diamonds are the only one that's really got the liquidity. Let's go to high options volume. Remember, liquidity is king. Okay, so the spiders. It's possible trade on the spiders. Implied volatility has been going down. Same with the Qs. The IV indexes are small, they're low. And in terms of liquid, it looks like it's just spiders and Qs that are giving the hint of volatility being low, that you might be able to buy it. Let's go to liquid symbols. Okay, IV rank. Some of these I don't know. See Nokia. What's up with Nokia? Did they have earnings? No, because I would have seen a volatility crash. But look at how low Nokia, even though its index is kind of high, look at the IV rank. Nokia has been like low volatility. Let's take a look at the chart and just see what's up with Nokia. Okay. So it must have had earnings the other day, because or a week ago, last week. That's probably why you're seeing that. Let's see what else we got here. Carnival Corp. I haven't traded CCL in a while. I've never traded the weed stocks. Again, the weed stock index is too high. Carnival Corp, the index is kind of high for me to be able to buy volatility with that kind of an index. Although the IB rank is low, I did good with CCL a while back. Look at Morgan Stanley. Volatility has definitely been sucked out of this one. Same with Alcoa, or American Airlines, excuse me. American Airlines, I think is because they had earnings. American Airlines has, I mean, it's like, the thing is if I were to do a calendar type of trade, chances are, let's see what's up with American Airlines. Because I know it had earnings. Or so this would definitely be something. If it ranges within that big candle right there, chances are you could possibly do a calendar. Look at the implied. The implied dropped out. That was earnings. And this thing can move about $1 a day for the next, it's double. And if I'm looking at IV rank is low, as well as, and it's got liquidity, 8 million shares. IV rank is low, and but the IV index is still a little higher. It's in the 45. And let's take a look at the IV index, see if they're off flat through the curve. So it's 45. And so the curve is, other than in December, it's pretty much around the 45-ish. So chances are you won't get a volatility crush. And that's what kills calendar spreads. Let's take a look at American Airlines and see what happens with a simple calendar, November-December calendar at the money. And let's just kind of take a look at it and see what it looks like. Okay. Oops, let's take this down to 12. We're selling the 12, buying the 12. Okay. Oh, you know what? Let's make these puts. Since we're going down, I want to do the puts. I'd rather do the puts and not the calls. Because American Airlines, where's it at right now? It's at 13.8. Oh man, I hate when it does that. I got to redo the entire trade. Okay. Tasty does that all the time. You know, you're moving, the moment you move a strike, both months come up on the 1 month, and it's just annoying as hell. And then you got to reestablish everything. So this one would cost, okay, let's see, we're selling November, 13, we're going to sell the 12. Sell the 12, okay. Sell the 12, buy that. So you're getting 26 cents a day. You're 7 deltas short. Sell the 12 and buy the 12. That's a simple calendar spread. very low cost spread. We'll probably do a double because all this is say for instance, say this market does fall, like let's go to analyze and analysis, go to Theo price. If this thing did fall, okay, there we go. Yeah, we don't want to use per contract IVs just yet. If this thing did fall, and let's go timing. Since it's November, we would want to be out of this since it's 25% of the trade, or 25%. That is 21 days. So you only want to be in this from now till, let's see, 21, so 5 days. You'd want to get out of this by November 1st, November 8th at the latest. So we'll say November 8th. So even though it's a little bit more than 25, it's almost 50. It's almost it's over 50%. But say November 1st. We'll just do that first because that's closer to 25. So November 1st. Okay, you'd only, if all things being equal and nothing else, you'd only make commission. This would be a commission trade if everything just stayed where it was at. If it goes to the actual expiration, so this would be a trade that I wouldn't put it on calendar, month to month trade. Okay, theoretical. All things being equal. Yeah, so it's showing $4 theoretical is what it's showing. Yeah, theoretical that it's showing. So for our, for the most part, I mean, it's not really like a money maker. And that's if we're gonna, this is a month to month calendar. If we did like a 9-day calendar, we would bring this back. The one we're selling, we'd bring it back to about 9-10 days maybe. Let's see, 0 day. Let's see. Okay, we would sell the November 1st and then buy like a few days later. And buy the one that's a few days later, which would be November 1st. We'll go like, we'll see. Oh, wait, we'll go like 5 days. So November 1st. We'll go November 8th. That'll give us 7 days between each one of them. 12 calendar. And let's theoretical. Let's see what our theoretical would be. All things being equal to, and let's see if that's November 1st. Yeah, so I mean, there's no real money here on this. There's no real money to be made. I was just looking to see, if there's any kind of money that could be made on this. Because I was looking at the lower implied vols. I have to go to the spiders if I did that. SPY. If I went to the spiders, you do have a 25 IV rank, so it is kind of higher than what I would like. But you can still do a trade across. We're still, the indexes on the spiders across are still only like, there's no real major IV crush. November 6th is the only IV pop you have where the implied volatility would go up. So if I did a calendar of November 1st, November 7th, and what's November 7th? Implied is up there. So November 1st, 7th calendar of spiders, which would be the 9-day. We would go out of the money. And it says it has the ability to move. By November 1st, it has the ability to move $8. But since we're only going to be in, if we did this as a 9-day calendar, November 1st, let's go to November 4th. We would do it November 4th because that's 10 days. So we would go November 4th. We would only be in for between now and November 4th. What would that be? That would be, and that's 10 days? Yeah. So between now and November 4th, if we were to stay in this calendar, ooh, you know what? I do want to take advantage of the possibility of volatility going up for this election. So I don't mind making this after the election calendar and just getting out before then. So if I'd made that, because I'm just looking at playing volatility, I would go November 8th, November 15th. I wouldn't mind that. November 8th, 15th, and just try to get out before then. They're expecting $15 expected move, 583. Yeah, the 583 minus 15, 75. What was that? 575. So they're saying that's the expected move. But what if I only wanted to be in this like 20%, let's say 30% of the time. So we're looking at 14 days, 30% of that would be about 4 days, a little over 4 days. Between now and 4 days, they're expecting this thing to move $4. So I would actually put this calendar on. I would like to, I'll go underneath about on the spiders on the November, what was it, November 8th? Yeah, November 8th. So 484, they're expecting that they say it could move $4 either way. So 484, I wouldn't mind. Say 481, just to give us some room. So we'll go 481 or 581, excuse me, 581 on the 8th, and we'll buy the 581 on the 15th. 581 on the 15th. Okay, that's $1.02. We get paid $6 a day. We're slightly short delta. It would cost us $102. We're $1.02. Slightly short delta. Let's take a look at curve. So if we did this, yeah, I mean, it's kind of close. I mean, it's, that would be, chances are they're saying a kind of a possibility of a break even curve wise would be around, let me see what the price is of there. Okay, let me just back this up, make it easier so we can see it. We're looking at around 562-ish. So if it got down to that 562-ish, that's where I'd be saying, okay, we'd be down a little bit. If it went up to 600-ish, our theoretical, we'd be up $1 or whatever. Let's see what happens and make sure I got the right dates here. Let's go today. Let's analyze this for today. Reset that for today. That's what I want to do. Reset it for today. No, we're not going to use per contract IVs. So let's go to our theoretical. Yeah, we're on our theoretical. If we use per contract IVs, yeah, that's today, reset. See if this, make sure that this is our reset for the November vols. Okay. So, see, that's the thing that is kind of trippy. Is theoretical should be 0. It's showing 25 using the contract implied. It's showing that as a theoretical. It should be closer to 0. anyways, if this thing stayed where it's at, didn't move, and we got to November 4th, or November, let's see, November 1st, our 25%, what would it be? Be up what, $37? Yeah, I don't mind this. I don't mind this at all as a calendar trade. Thing is I want that market to come to me. You know, I do not want to chase this. I want it to come to me. Yeah. And the delta is pretty much delta neutral. So I'm just playing this thing, and this thing can move because on you know, it has moved. I'd expect this thing to move $10 either way, but the implieds are so low. If it does move, that means it gets more volatile. So, you know, especially if it falls, it means it'll be getting more volatile. It can move $10 easily. Right now it's moving 5, but I always double that. So if I go there, 580 to 570, you know, we'd be theoretically we'd be okay theoretically profit wise, but you know, it's still, you know, so to 570 using per contract IVs, well, we'd be down a bit. Yeah, we'd be down a bit. Like I say, it can move $10. It could definitely move $10 on me. But the thing is, when it goes down, volatility goes up. Because if I went, I mean, that's her, you know, if I looked at not the delta, but I look at the Vega, should show us our Vega. Yeah, it's way up. There it is. So our Vega. Oh, wait a minute. I'll see why. There we go. Our Vega. You know, it'd be okay doing Vega. Our Vega would be okay. You know, because the volatility will go up as the market goes down. And I see the skew of the Vega curve, which is that purple curve, and the skew of the between the purple and the one that's underneath it. Man, this makes it difficult. I can't see the belly of that curve because prices are in the way. That's kind of a real annoyance with this platform. I just wanted to see the belly of that curve, but it is what it is. If I got into this trade, I would want this market to chase me. What's our bid ask? 107. So I would rather this trade, you know, chase me and not the other way around. Because again, I would only be in this till November 1st. Let's see, November 1st at the latest. Because you don't want to stay in this trade that long. Any calendar, you know, it's like 25%, and then you want to get out. So if we stayed in this trade, we would want to get out no later than, say, the 10th. Yeah, we'd say the 10th at the very most. If it doesn't, you know, if it doesn't produce results, then it's not worth it. But I don't want to chase it. I'm just going to put in a high price and see what happens. You know. Okay. So they filled it at, I did that again. I did it again. I keep doing the sell, but it's 3 cents. Okay. Damn it. I meant to go instead of 105, 103. Again, I keep doing that because my mind's in the sell mode of selling. It's 103. My mind is selling premium, and so I did it again, brother Will. My mind is still in selling premium. You want to go lower when you sell premium and higher. KW, good to see you. I did it again. The same thing I did with EEM, I did here. You know, not thinking. It's like, duh. You want to go down and not up because you're buying premium. You want it to be cheaper, not expensive. But I'm not going to cry. I'm not going to cry. It's just, you know, another dumb mistake. But at least I got filled. Where's EEM at right now? Yeah, we're only down $1 on that. So for the day, let's see, dollar. You know what I'm gonna do. What did I buy this thing for? 107? Let me see something. 107. Okay. I just don't like mistakes. Let's see if I got out what's commissions, estimated cost of the trade. So 28 cents. So because I pay no commission. Okay, so it's not letting me out. It said, Negro, you did something stupid, but now we're not going to let your black ass out. I was trying to get out at 105, get out of the calendar, and just put it on right this time, so I could show you guys exactly my faux pas, and just show you the right way to do it. And I don't mind paying 3 cents for a lesson for my ignorance. Okay, we'll see if it'll get me out. Okay, now let's do this right. Okay, I lost 3 cents. Okay, whatever. So, or 2 cents. What did I sell it for? Okay, so I lost $2, but let's do this right so I can show you, and I could start, I could start doing things and thinking, especially when I haven't gotten much sleep, and I start thinking. So yeah, so we bought it for 106, sold it for 104, so I had a $2.28 lesson. So let's do this right so I can show you how this trade would be. Let's duplicate this trade again, the calendar that we're buying. Okay. Now, what we're going to do is go down in price. So it's at 108. Now we're going to go to 105, 103. No, we're going to try to get it at 103. Okay. We're going to try to get it at 103. Man, it's bouncing between 103 and 102. We may even get it at 102. It looks like this thing is just going up and up and up, which I do not mind. 102. Okay, now we're going to see if we get filled at 102. Okay, now we'll keep it on. Okay, because we want to buy it cheap, not expensive. I could have kept the trade on, but I want to just show you guys how to do it right. Even though I'm being a dick for a tick, I gotta get in the mode of thinking, hey, since I'm doing calendar spreads, calendars are buying spreads. You buy low. So it's a lesson to learn. So we're trying to buy it for 102. And I may push my price to 103. We'll see. Because it looks like S&Ps want to go up. And the more they go up, let's see. Okay. Let me make sure that we're still live. Okay, so anyways, I just wanted to show you that. So, I'm buying this calendar. Basically, I want to only be in 25% of the time, which is a $4 move. Either way, I bought it with a $15 move either way, so it can move. This thing has a probability of moving $10 either way. By expiration. Or not just, the ATR, it's not, there's $15 by expiration, but it's got, the ATR saying this thing can move $10 a day. If it moves to the low side, we'll get higher volatility because the volatility goes up when the market goes down. We're buying it, at that lower price at 102 if we can get it. If we could get filled at 102, hopefully we will. Hopefully it'll come down a little bit. I had it wrong. The more and more further it comes down, the more and more that we're going to more than likely get our price. And I don't mind paying that little lesson because I did that again. I got to get used to that. I'm so used to selling premium that I always look at the high side and not the low side when you're buying. You buy low, sell high. So so that was just just kind of showing you I made my mistake. Now I'm correcting my mistake and doing it right. to the tune of $2.28. Oh well. But anyways, where things are at right now, yeah, FXI is definitely moving on us. We're still delta wise, we're still kind of even on all our deltas. So the man is in the mountain. So we got some trades. We got some trades on today. I'll go back to GDX and probably lower my price because it's not really moving around. So I mean, so there's some trades on today. We've already got this week. We've already got 5 filled. Now we could get, or 4 filled. We got 4. I thought I filled 4 this week. Yeah. So all we got to do is fill. I would have had 5, but I messed up that SP, the spiders. I should have had it where it was at. So we're looking at, if I can get these 4 trades filled, or these other 3, that'll be 7 filled this week. And hopefully Tasty Trade will fill it up for me. I don't know if you guys get this, but I get all the spam in Telegram. It's like major amounts of spam on Telegram. At Telegram and okay. Let's see. Woo, man, this election thing. I'm watching this election stuff, man. It is getting even crazier. What the hell? Man, Telegram is just, somebody's got my Telegram number and or Telegram, and then they just telling folks spamming. Same with WhatsApp. Just spammed and spamming. It's all about trading. Somebody's trying to do that. I guess somebody who doesn't want to trade either doesn't know how or doesn't want to. It is what it is. But anyways, so far, we got these trades filled. So we'll see what happens afterward. We'll just sit and wait and see what happens in terms of seeing if some of these others will get filled. But that's about, just, putting on trades and managing. I start out very simple. I look at markets, even though I did a kind of different order. I look at the markets, price of commitment, price of fear, price of money. I go into the positions I have, the inventory I have, the stuff that didn't get filled, and see if I could get filled, if any conditions change so I can put those trades on. Then I go look for new opportunities. It's that simple. And then, when you're doing your managing your trades is when you do your inventory, because that's where you manage all your trades. It's that simple. Anyways, just giving you kind of an idea. Oh, okay, I got to make my phone number private on Telegram. Okay. Oh, okay. Let me see. That's probably why it does that. Okay, I'm going to do that. See if I go, what is that? I can't really see it. Would it be settings? Okay, let's see. Privacy and security. Privacy, my contacts. So where are my contacts? Who can see my number? Okay, well, see, I don't know how many contacts. Somebody's on the contacts. There's the folks that could see the number. And that's interesting because I don't, I don't have very many contacts. But we'll see it. I made it private. So we'll see. Hopefully no spam comes in. Because, somebody's been spamming like crazy. Thanks, Brother Will. I just did that. So anyways, we'll see what happens market-wise. And later in the day, I'll see if I don't get filled on those, I'll just change my prices closer to the market. Because I have the spider trade, I don't mind if it gets filled or not. The one I just made the mistake on, but it's the gold and the TLT that I would love to get those butterflies filled. If I can get those filled, get those butterflies going, then and again, those I have to hold longer than I want to. The calendar, EEM, and SPY, I'm only in for 25%, and then I'm out. Regardless of what happens, I'm out. Even if it's just a few bucks, I'm out because it's even though it gets more volatile going toward the expiration, it could go against you quite drastically, and that's the thing. I don't want to pay the price for that. If I'm making a little bit of a profit, I'm gonna keep the profit and get out. That simple. Anyways, hopefully that works. And I just keep you posted later in the afternoon if I make any trades or if I adjust. Y'all take care.